Let's bring in Juliana now for details. Hello, Juliana. Good afternoon. Welcome to New United Kingdom. Well, give us more insight into the latest UK manufacturing data reading in the month that just ended.
Well, this is good news for manufacturing, Chimaze. You know, this is the best news we've had for quite a while, in at least about a year. Finally, PMI data has reached 50, that 50 being a neutral mark. Anything above 50 shows that your economy or that particular sector of the economy is expanding. Below 50 is a contraction, and we've had quite abysmal PMI data coming out of the UK over the past few months. But again, I say it all the time, I hate to repeat myself, but that historic election victory from Prime Minister Boris Johnson definitely appears to have boosted business optimism. Households are spending again, and people are employing, because we did have that labour market data as well, showing that over 200,000 people had gone on into the economy. So this is really good news for Boris Johnson, especially being the first significant data to come out since we left the European Union on Friday. This will definitely give him some boost. There are some other information that the PMI did cover, which is that exports are at a 3-month low. So even though manufacturing within the UK is good, exports are not that fantastic. But look, a PMI manufacturing figure of 50 is good news.
So what new rules is the UK Financial Conduct Watchdog putting in place for credit card companies to treat customers much better?
Now, this is quite an interesting story, especially for people in the UK, because most of our viewers here will probably be in debt, and that's what the huge issue is. The Financial Conduct Authority are really trying to crack down on credit card issuers because with every £1 that you owe, a lot of customers, up to 4 million, are spending £2.50 on interest. So they're paying more in interest and other fees than they are in their actual debt. And the Financial Conduct Authority think the credit card companies are not doing enough. A couple of months ago, these firms said that what they would do is, if you're paying the minimal amount back, then after 36 months, if you haven't increased how much you pay back, then your card will be cut off. And the FCA is saying that that's not good enough, that rather than just cutting people off from their credit cards, they need to stop fees, stop interest rates, and basically reduce them. So good news for those who are addicted to using their credit card or feel that's the only way they can pay their bills at the end of the month. And it'll be interesting to see exactly what the credit card companies say, because this was just a letter that the FCA sent. So there's still a long process in this discussion.
Well, we'll wait and see what their responses will be. Anyway, it's the first trading day after Brexit. Take us through the intraday moves at the London markets today. Are there corporate news and earnings impacting the equities trading today?
Well, those PMI numbers definitely boosted the equities market. At intraday, the all-share is up 0.37%, the FTSE 100 is up 0.46%, and the FTSE 250 is up 0.38%. In currencies, though, the British pound is down on the dollar by a whopping 1.08%, down on the euro by 0.85%, and down on the Japanese yen by 0.99%. As can be expected, Chimaze, everybody's talking about the coronavirus and how that's affected the Asian markets much earlier today. And also as well, a good news story, I suppose, for Britain. Nissan, the car manufacturer, have said in the wake of a no-deal Brexit, which we could potentially be heading to towards the end of the year, they would take their main manufacturing plant outside of mainland Europe and put it in the UK. So that's a really, shifted the agenda and the way people thought car makers would go. So it'd be interesting to see if anybody else follows suit over the next couple of months.
Absolutely. Well, let's continue to keep a tab on some of those developing stories as they affect the market. Enjoy the rest of the day, Juliana. And stocks in mainland China fell more than 7% today as they returned to trade following an extended holiday amid an ongoing coronavirus outbreak. The Shanghai Composite fell 7.72%, while the Shenzhen Component dropped 8.45%. The Shenzhen Composite also declined 8.414%. The indices all fell around 9% in early trade during the session. The People's Bank of China announced on Sunday that it will inject 1.2 trillion yuan worth of liquidity into market via open market at reverse repo operations. Hong Kong Hang Seng rose 0.35%. In Japan, the Nikkei 225 fell 1.01%. South Korea's Kospi closed largely unchanged. Meanwhile, shares in Australia tumbled as well, with the S&P ASX 200 closing 1.34%. And U.S. stock index futures pointed to a higher open in the morning as Wall Street looks set to shrug up fears over the spread of coronavirus. At around 2:20 a.m. Eastern Time, Dow futures were up by 132 points and implied a positive open of more than 127 points, while futures on the S&P 500 and Nasdaq were also higher. U.S. investors are seemingly looking to buy the DAP the day after the S&P 500 and Nasdaq recorded their worst start to a trading year since 2016. Corporate earnings season remains on the agenda, with Cisco among those reporting before the bell, while Google parent Alphabet is set to report after the close of trade. On the data front, the final market manufacturing PMI reading for January is due at 9:45 a.m. Eastern Time before a range of January ISM manufacturing figures at 10 a.m. Eastern Time. There's more to come on Business Incorporated after the break. To stay with us.